Ripple's new 2023 New Value Report, Crypto Trends in Business and Beyond. And this is directed at financial institutions and enterprises. It's not directed for you, but if you want the information and the knowledge in this rapidly evolving space, you go to the source to get that. And you go to the most up-to-date information, a survey of 900 global financial leaders, and the most up-to-date information of what Ripple's focusing on institutional DeFi, because that is their focus. The whole taking over Swift narrative will just fade, and this will take the spotlight. But we're covering this here first because we're at the forefront, and that's what we do.
I think we think that institutional adoption can be a huge driver of DeFi growth. A lot of what I do is about the company strategy.
The XRP Ledger is poised to become an ecosystem of cooperatively interconnected XRPL protocol chains.
In terms of Web3, what is that other side of Ripple doing to enable Web3?
I think we're doing a lot of different things, but I'll talk about the one that's most interesting because I think it's most different from what everybody else is doing. Just like when everybody else in the space was focused on bottom-up adoption of crypto, Ripple kind of focused on top-down. Not because we didn't believe in bottom-up adoption, but it's because it's something we felt that we could do and that other people couldn't really do. Like a couple of people working on some software, they're not going to be able to make enterprise software that banks are going to use in their payment flows. That's not realistic. You have to have an enterprise to do that.
Welcome to the DeFi Standard, and this is Mickey B. Fresh.
What we're looking at in the Web3 space is very similar. One of the things that we're doing is we're looking at the barriers to enterprise adoption of DeFi and Web3 technologies. What's preventing enterprises from using those technologies? And there's areas in tokenization, in liquidity, in compliance, identity, those kinds of barriers to sort of institutional adoption. Just like the internet, in the early days, there was adoption by universities and adoption by the military that helped to grow the platform. I think we think that institutional adoption can be a huge driver of DeFi growth and can make it more attractive to these bottom-up approaches. And that's something that is hard to do on a small scale. So I think that's something where Ripple's unique ability, the things that Ripple has, the people that we have, the money that we have, and the sort of the skill set that we've built around building software that enterprises can rely on is unique.
So over 3/4 of global financial institutions are interested in using DeFi to meet their business needs. So how many people really knew that? I didn't even know that. I mean, that's significant. That's huge. That's 75% of all the people that they surveyed said, three out of 4 people, global leaders said, oh, we're interested in using DeFi. So they're not trying to own DeFi. They're looking to use DeFi. 76% are exploring DeFi in the next 3 years. 88% expecting significant or massive DeFi impact across risk management. 87% real-world assets, stocks, bonds, commodities, liquidity management, identity management, borrowing, lending, and insurance. That's all the big categories. 50% of leaders plan to use a custody solution in their business within the next 3 years. What do you need a custody solution for? Because you have some kind of tokenized assets. And at the end of this video, you can hear David Schwartz talk about how the universal wallet is his vision or their vision for the universal store of value. And every asset can be held in there, and you could go to pay with tokenized gold right from your wallet to your grocery store. And that's like what the vision with the Internet of Value is. That's what's being built here. And we always need to remember that's like what Ripple's focuses on. Now, XRP and Ripple are not the same thing. Like the XRP Ledger will have a whole new hooks sidechain that will have different governance, different amendments enabled, and have different things in the main ledger. uses the same asset. The EVM sidechain will have no XRP tech actually, and will use XRP for staking. More use for the asset. Now, XRP is the core reserve currency of that economy. But off of that, there'll be other opportunities, especially with tokenized private equity and new financial instruments that we have can't even fathom yet. Just like they couldn't fathom Twitter, all these social media platforms, you can never fathom that. Or even like the content creators business model thing, and how all these different celebrities with NFTs and other things are going to take off for digital rights. We're just at the beginning phases. And the truth, there is no end game where like crypto goes to the moon and it's adopted by everybody. Like, that's not how it works. What is crypto's financial system? It's decentralized finance. That's what goes with crypto. It's like on-chain finance. That's how you just have to think of it. It's like we're using crypto and these tokenized assets to do things on blockchain with smart contracts and automation, zero-knowledge proofs. That's all I mean by DeFi. And I think sometimes it can be intimidating because people don't understand it. I mean, I'm not going to sit here and do basics on DeFi. There is literally a ton of resources. Just search YouTube. There's some great like visuals and stuff if you want to look further into that. And it's not on the XRP Ledger yet. It hasn't been popular. But I'm telling you, it's coming. It's why I named the channel the DeFi Standard. So they even say it right here. Use cases, DeFi markets, practices, and protocols can be applied to business applications in many shapes and sizes, including taking out a business loan or sourcing funding for a lending business. This enables companies to take out or fund loans quickly and easily using digital assets, such as stablecoins, cryptocurrencies, and digitalized real-world assets. Deposited via smart contract, lending businesses generates interest on those assets the same way banks and lenders earn interest on traditional lending practices and currencies. For payment leaders and those in institutional banking, the idea of using DeFi for these use cases isn't entirely new. Indeed, we discovered high levels of comfort among these respondents at financial institutions. Like, these numbers are staggering. Look, significant or massive impact. 48 and 39, that's 77%. I mean, those are very high. I am very surprised. And I mean, they already kind of knew this when they focused on it, but even there's points in here, they say they were surprised at how high. Now, next, we're going to focus on, you'll hear David Schwartz talk about it, but we're not going to talk about it here in this video, is decentralized identity and what that means. All these things are going to apply to you. So what we talk about here isn't just a story and, validating what you want to hear. They're relevant because DeFi is DeFi. Regardless if it's institutions doing it or you doing it, the activity is going to be the same, and you'll have to do it in a compliant way soon too anyway. There will be always outside the regulated areas, but with technologies like zero-knowledge proofs, digital identities, identifiers, this is coming before that whole like CBDC control everything. If you don't like that and you're fearful of these CBDCs controlling the population, the best way that you can impact and have a say in deciding the future is to adopt the opposite of that. And what is that? That's decentralized identity, Web3, and non-custodial wallets. That's the best way to do it. Not being scared and only using cold wallets and never wanting to interact with the blockchain. Cold wallets have their place and their use, but that's not progressing forward. You could use both, and this isn't here quite yet, but we're at that brink. If you have XRP, you better have a Zum wallet. That's all I'm saying. If you don't, you should get one. Not my sponsor. I'm just telling you it's the best for the network to engage with. And yes, retail is absolutely, anyone who's thinking that retail, it's almost laughable at this point because I find it funny because we're getting a whole sidechain being built. That's all built on by XRP Labs. That's going to use everything XRP focused and has been building a wallet focused for retail and has 300,000 users. Let's listen to David Schwartz talk more about institutional DeFi.
I think you'll see continued growth of the NFT space into areas. I'm hoping things like carbon markets and tokenizing of real world assets. But I think also you're going to see movement on the
Web3 and DeFi space.
We're working internally right now. We have proposals for things like identity and sanctions compliance. And I think tokenization, liquidity, compliance is especially sanctions compliance. So I think you're going to see interesting stuff from us. And I should mention that we're always hiring. We hired 350 people in the last year, 3 new offices. Great place to work. A successul company, historically successful company.
Hire me. Just kidding. Just kidding.
But also, a lot of what I do is about the company strategy. We're like a leading company in a rapidly evolving space. And so we're building products for customers that don't exist. And we're trying to predict where the market's going to be when our initiatives come to fruition.
So this is why Ripple has completely pivoted their business model from cross-border payments to institutional DeFi, because this is the ultimate prize. This is the so-called end game for a company positioned like Ripple, which has an underlying blockchain that's getting now the enhancements to facilitate the liquidity, the trading, and the identity. So you have a service layer of compliance on top. This year, we're honing in on 2 important and growing aspects of managing crypto: institutional adoption of DeFi and crypto custody. They're telling you, we're honing in on these 2 important things: crypto custody, institutional adoption of DeFi. I understand there's this bias against Ether and Ethereum and all that. That's fine. But that doesn't mean that DeFi belongs to Ethereum and it's not an XRP thing. No, it's an everything thing. It's a global financial system thing. Just to be clear here, maybe some people hear institutional DeFi and they think, oh, they can't participate. Oh, it doesn't have anything to do with them. No, it's absolutely the greatest thing, because it means that you're able to participate prior to the institutions coming in. And that's where the opportunity is here. And that's why I'm so excited about it. I'm trying to explain to everybody what this means and where the opportunity is going to be. And it's going to be coming. So what else do they say about institutional DeFi? There is burgeoning demand for institutions, banks, central banks, payment service providers, crypto PSPs, fintechs, and more to use DeFi as a critical future financial framework, as an alternative to traditional financial services. DeFi leverages immutable public ledgers and smart contracts to enable 24/7, 365 access to financial services, new markets, buyers and sellers, and often near real-time transactions that are fast, secure, and transparent. Institutional DeFi leverages that core functionality and approach and layers on existing financial compliance frameworks necessary for institutions to take advantage of the inherent benefits of the blockchain. This not only helps ensure financial integrity and appropriate safeguards for consumer protection, regulatory compliance, and risk analysis, but also enables a global, out-of-the-box, flexible, inclusive, lower cost, and more efficient system, all without compromising security and stability. In the broader field of DeFi, the Block Research Report also notes that the DeFi narrative started to gain traction in 2020, and the number of early-stage deals increasing 11-fold. So we went from 1 billion to 250 billion locked in just 1 year. So when the wave of real-world tokenization comes on and converges with DeFi, expect that to turn into trillions locked, hundreds of trillions locked. And I'm not joking, hundreds of trillions locked. As tokenization converges, those numbers, the WEF and them putting out, I think are way undervalued. Broadly speaking, while some institutions have lingering hesitations related primarily to compliance and regulatory clarity, enterprise use cases for DeFi like cross-border payments, lending, borrowing, insurance, and settlement continue to be proven out, with estimates that most securities, stocks, bonds, and equities will be tokenized by 2030. These use cases are core to the financial services industry, and with new and improved ways to offer those services to customers, we will undoubtedly see continued institutional exploration. Government-backed institutions around the world are exploring institutional DeFi to tap into market potential, to free up liquidity and save costs with faster settlement.
So are those enterprises that you're building software for, are they interested in Web3? Do they want to start, I don't know, enabling NFTs to drive some sort of adoption? Or
the funny thing is, when we started with RippleNet in payments, the enterprises weren't interested at all. And we just said, well, forget about all this blockchain stuff. We'll just make your payments better. And then, of course, we had the opportunity to go back and say, hey, now that you guys are interested in blockchain, Coinbase going public sort of caused every company to realize, wait a minute, we better have a strategy. They went public and they had a market capitalization that was greater than like financial institutions that had been household names for decades. And it was like, we have to have a cryptocurrency strategy. We have to have a blockchain strategy. And it wasn't just that. I mean, there were other factors too, but like that was a watershed event. But also there was this gradual trend where companies realized that they wanted those things, and then we were to provide it to them. And so I'm just saying it doesn't have to be the case that people want it in order to justify building it. But I think that we are seeing specific blockers to institutional adoption. Like one of the ones that's the simplest and easiest to talk about is sanctions compliance. So your listeners may not know that like the United States government has a list of entities that you are not allowed to do business with. And if you do, the sanctions can be, the punishment can be extremely high. And I didn't know I was doing business with them is not an excuse. It's what's called strict liability. It means if you did it, you have to figure out a way not to do it, or you can't do the thing that might create the chance that you'll do it. And this is a real blocker to institutional adoption of DeFi. It's just one example, but it's for many companies. It's like, if we can't do sanctions compliance, we can't do it. It's just a hard no, because they're facing potentially tens of millions of dollars, plus in liability, and there's nothing they can do about it. They're just not going to do it. And so those are problems that are very tangible today. And so solutions like identity and sort of creating a sort of island inside the ocean where there's compliance, these sort of steps towards compliance will help to bring institutions into the DeFi world. And I hope we can do that without trying to change, Bank of America is not going to use SushiSwap. You know what I mean? It's just not going to happen. And SushiSwap is not going to require people to prove absence of sanctions compliance in order to use it, because there's just there's no practical way for them to do that. And so the thing is, if what is the solution that doesn't try to impose one regulatory regime on an entire blockchain? Like Ethereum is not in the EU ecosystem. The XRPL is not under US government jurisdiction. So the challenge is, if we're going to have public blockchains that aren't in jurisdictions, how can we allow enterprises to comply with regulations if they want to, which they do because they won't adopt the technologies if they can.
So we want the answers and the most up-to-date information of what Ripple's focusing on. And this video is mostly on institutional DeFi because that is their focus. I don't know how many ways I could explain it, so I'm going to try different ways and approaches. And it's going to take the community a while to process it, but it's here. It's not going anywhere. It's the future. The whole taking over Swift narrative will just fade, and this will take the spotlight. Now, building an institutional DeFi ecosystem can have profound effects on XRP as time progresses, but it might not be the first thing that's used, but the underlying pipelines being built, the AMMs for liquidity at the foundation, that's significant. And why is it significant? It's because you and I and everyone in the community who has XRP can provide liquidity in these global pools of public liquidity that people can contribute to and draw off. That is XRP's value proposition. No matter how much people want to ignore and have selective hearing when it comes to what David Schwartz says.
A lot of what I do is about the company strategy. We're like a leading company in a rapidly evolving space. And so we're building products for customers that don't exist. And we're trying to predict where the market's going to be when our initiatives come to fruition. And when you do that, you can't just ask your customers what they want, because your customers don't exist yet, or you don't know who they are. And so it's a little bit more of a discipline of tracking what's going on in the space, external changes like regulation, technology, internal ideas that you have, and then aiming that into a strategy and then fine tuning that.
And my belief is always you go to the source to get the best information, and we're at the source. So global finance landscape continues to shift and evolve, ultimately heading towards a world where value moves as seamless as information does today, what we call the Internet of Value.
And then the other side of Ripple, we call Ripple X, and that's the side that's building new technologies for the XRP Ledger. That's the side that's kind of bringing institutions and Web3 and NFTs together, building open source software and participating in a greater community to build for the XRP Ledger.
Got it. So we'll focus a little bit more on Ripple X today, just given that this is a Web3 focused podcast.
As it turns out, the real building with crypto is still happening. In fact, it's only just beginning. And that's important right there, because what we've seen, and maybe what you're aware of with DeFi, has been nascent and has been the early stages of, but it's less than 1% in its disruption. Obviously, at the beginning of any disruption, it's going to have minimal impact, but it's going to grow rapidly.
This is from Adam. So this is all true, but right now, much of the activity in DeFi is still degen activity that doesn't have much linkage to the real world assets or financial activity. What do you think it's going to take for that linkage between real world and DeFi to finally start to happen in a meaningful way? So that's a great question. And basically, this idea is a new idea. We are like 1% into this disruption. So it's really very early. And if you look at it and say, well, 1 trillion on Uniswap, that's not trivial, but it's multiple trillions trading in centralized exchange. And you're correct that most of the activity is just between different DeFi tokens. And we're not quite there yet on the Web3 stuff. So the way I look at it is that this is an extraordinary situation where this is like a once in a generation type of situation where you've got something that's strongly disruptive and you're at the beginning. And don't judge the size of the disruption by the size of the current market. By construction, if you're just at the 1% point of the disruption, it's going to be small by definition. And what you need to do as an investor, especially, is to think, well, this DeFi space is small, so it's nothing. It's going nowhere. No, that's a myth. That's the wrong way to look at it. You say, yes, it's small now, but the vector is very steep and positive, and it could be really important in the future. Yes, there are risks, and there's going to be more risks realized in the future. But with any new idea, there's risk. Okay, if you don't want risk, invest in treasury bills. So again, this is a situation that to me is very exciting because it deals with my expertise in finance and completely changing the rule book, completely not renovating our financial system, but potentially rebuilding it from the bottom up.
Now, building an institutional DeFi ecosystem can have profound effects on XRP as time progresses, but it might not be the first thing that's used, but the underlying pipelines being built, the AMMs for liquidity at the foundation, that's significant. And why is it significant? It's because you and I and everyone in the community who has XRP can provide liquidity in these global pools of public liquidity that people can contribute to and draw off. that is XRP's value proposition, no matter how much people want to ignore and have selective hearing when it comes to what David Schwartz says, but also what primary problems and pain points these technologies can solve across key use cases. This is a guiding light for companies and FIs looking to understand everyday business value that crypto can provide, because, as it turns out, the real building with crypto is still happening. In fact, it's only just beginning. And that's important right there, because what we've seen, and maybe what you're aware of with DeFi, has been nascent and has been the early stages of, but it's less than 1% in its disruption. Obviously, at the beginning of any disruption, it's going to have minimal impact, but it's going to grow rapidly. When you see these numbers and how the global leaders are looking at how DeFi is going to affect their business in the next 3 years, you better learn it. I mean, that's an opportunity of a lifetime. And there'll be a plethora of different opportunities. And picking out the right ones will come from the knowledge you have and establish that's different knowledge than maybe you needed 2-3 years ago. The data does not lie. They surveyed over 900 institutions, global leaders, everywhere from enterprises to banks to corporates to central banks, all the way. And these numbers are unbelievable. So this idea of CBDCs are just some isolated thing is not the case. Decentralized finance, tokenization, and non-fungible tokens, central banks, CBDCs, payments, custody, and compliance. We also go a level deeper to explore not only the real value they're providing right now, but more and more how and why these technologies are beginning to merge together to provide a holistic, interoperable solutions that will have deep, long-term impact. The global financial landscape continues to shift and evolve, ultimately heading towards a world where value moves as seamlessly as information does today, what we call the Internet of Value. And my belief is always you go to the source to get the best information, and we're at the source. Global finance landscape continues to shift and evolve, ultimately heading towards a world where value moves as seamless as information does today, what we call the Internet of Value. As this past year has shown us, now more important than ever for global enterprises and FIs to be able to identify, define, and demystify primary topics, trends, and technologies to help pave the way forward for partners, customers, and the industry at large. It's just the tip of the iceberg of the opportunities when it comes to Web3, Internet of Value, and being a part of the community that's going to rapidly develop. We're just making it through a case that's been 3 years. Finally got through the Hinman emails, and now we're going to get a decision. But when that ends, there's just going to be a spec run, and then it's on to, okay, real world utility. But there's a lot more than that. And the real disruption is going to come in the community at that point. So I'm trying to prepare everyone for that disruption that is inevitable. It's not a question, it's going to happen. Crypto use in general has been exploding around the world, according to the Block Research's 2023 Digital Asset Report. And if you look from different perspectives, you can have a different, mindset on how this ecosystem looks. If you looked at only Gensler headlines and the negatives, you would think, oh, this is getting crushed by the big banks, by this and that. But that's not the perspective at all when you step back and look and you see JP Morgan, BlackRock here, Fidelity are all now touting blockchain's ability to solve real-world problems. Now, these big institutions, I think sometimes people get confused and think they're all like coming in to take your crypto or this. They're coming in for tokenization, but that's going to merge with the on-chain ecosystem that's being developed. Institutional DeFi does not succeed, no matter what Ripple does here, if it doesn't have an underlying community-driven public open ecosystem to begin with, because it's not going to happen in isolation. It might start in private pools, and certain things can be permissioned, but ultimately they're going to have the most success on the networks that can provide the services, compliance, and then have public pools of liquidity. That's the goal. And Ripple is uniquely, like he said, Ripple's uniquely positioned, and they truly are. Once you realize all the things they're doing, it's no longer take over Swift. That's why I think some people got stumped. Simultaneously, DeFi markets, practices, and protocols are evolving to offer more institutional-grade lending and borrowing products in an effort to make financial services available to more people, improve agility and liquidity of tokenized assets, increase consumer protections and regulatory compliance. DeFi protocols like trading and lending improve liquidity for tokenized assets, while decentralized identity has the potential to enhance compliance and the onboarding process.
Looking to the future, we envision launching things like micro-lending protocols that facilitate peer-to-peer lending. Now, that's not something that can currently be done in Palau, but using this technology, it can be done fast, cheap, securely, and it will be beneficial, cost-effective for the provider, and financially beneficial for the citizens of Palau. So imagine a scenario where, for example, the Bank of Guam decides to structure a liquidity pool, which enables it to provision new services, generate revenue to the citizens on the island, and equally, maybe scale down their brick and mortar footprint as a cost savings. On the other hand, the citizens of Palau can access the liquidity pool to create credit, access short-term liquidity, and use future government payrolls as collateral for any loans they obtain. And they can also pledge money into the liquidity pool to earn interest. So these are things they can't currently do. When I think about using technology and stablecoins to enable financial inclusion, this is exactly the kind of use case that I think Ripple is focused on. And it's the kind of thing we're seeing opportunities like this all around the world. My one takeaway from engagements like this, and it holds true everywhere we go, is that there is no size-fits-all solution to addressing these problems. Yes, there are common themes, but all the challenges are unique, and you really have to understand how to address them. And we talk a lot at Ripple about how to do that. That's the hard part. That's the fun part. But I think that's where we will have our greatest impact. Ripple is approaching this gap with a technology that we built, which is a private ledger that enables central banks and commercial banks and other firms to issue and manage digital currencies, the full life cycle of a digital currency for any number of use cases, many of which we can't even imagine today, which is enormously exciting. The technology is based on the public XRP Ledger, which has been in production for the last decade.
And this is going to start developing, but it's not going to be like, boom, all of a sudden we have institutions playing around in pools with, retail overnight. I mean, that's not going to happen, but it's going to slowly happen. And the positioning over the next, I want to say like a fair guess here on my part is the next 3 to 18 to 24 months are probably going to be the most significant transitional jumps, I think, in just, I don't want to say price, but adoption and developments from an enterprise side and a maturing of these layer 1 networks. And you'll start to see who's going to be in the lead when it comes to the platform. But then you have this asset too, and the price doesn't always represent the adoption level. So that's why Glenn Hutchins says the price could be a distraction sometimes, because it can be, because it's a new asset class. It's attached to a protocol and a network, and the market hasn't truly learned to value that. XRP does not have its full economic model, so you can't put out a valuation report when it doesn't have its full economic model. There's no yield, and there's no storage demand. Now, I am as bullish as I could be on XRP because I see the flipping that's kind of going to take place as Ripple's positioned right. XRP Labs has the hook sidechain We have an EVM sidechain. We have the Metaverse Root Network. We got the Enterprise Private Ledger DeFi. And then we have the AMMs being built into the ledger. And that's going to be probably the most significant driver of value because it creates storage demand. Now people want to hold the asset because they can earn yield. And then they could go turn around and use this LP token in DeFi and use it in derivatives. They could leverage up. They could borrow against it. They could go short. You could do all these different things. And that's what's going to drive the storage demand. Now, what creates the yield is what he's so excited about. And when he says trading strategies, I don't think he realizes it, but it throws people off. It's not somebody specifically trading. The AMM and the continuous auction mechanism work together to create value that's brought back to the pool and earned by liquidity providers. You don't have to do anything except deposit into the pool, and then you get this yield-bearing asset.
What can we expect next from Ripple? What are you most excited about? What are the biggest innovations that we can look forward to at Ripple and with the XRP Ledger?
Well, the one that I'm personally most excited about, but this may have to do with quirks of my personality, is the automated market maker proposal. I'm just personally really excited about that. I've been trading Forex and other types of market making for 30 plus years. And just the way the automated market maker works. So I'll give the short version of why it's interesting to me is in almost every other arena, volatility is a minus. An automated market maker turns volatility into yield, which is super. And I could go on an hour about the math, but volatility is inefficiency, and inefficiency can always be solved at a cost. You can always make a profit by reducing some inefficiency, unless there are and normally you can't because there are market obstacles. So, for example, trading stocks is expensive and slow and all of that. But the transaction fee on the XRP Ledger is a tiny, tiny fraction of a penny. The transaction completion time is 10 seconds or less. So like the mechanics to the efficiency is so high, it's going to be very interesting to me to see, what that does as far, how that performs. Super exciting for me personally. I don't know that other people are as excited about it as I am. I hope they are, because I think it's cool. And we've done some unique things in the way we implemented it, ways that I think will improve essentially the yield. It's effectively a way to lend money to an automated machine that makes money through implementing trading strategies and through making markets. So we'll see if that delivers on my excitement.
But here we go. They name what I've been talking about. Their partner and their largest shareholder. Indeed, there are well-known finance advocates and early adopters. In November 2022, DBS Bank, JP Morgan, and SBI Digital Asset Holdings conducted foreign exchange and government bond transactions on the Polygon network, a decentralized Ethereum-based platform. Don't get caught up in the network. The fact that they used a public network is what is important. This is believed to be the first time a major bank tokenized deposits on a public blockchain.
The genesis of financial markets is born out of sale and purchase. Yet the manner which transactions happen over the counter has hardly changed through the years. Project Guardian explores how blockchain technology can potentially revolutionize the process. To tap on the benefits of blockchain and smart contract, an open interoperable network was conceptualized to allow assets such as cash or securities in traditional forms to be tokenized. As part of the asset tokenization process, minted tokens are whitelisted and then held within their respective digital asset wallets. Verifiable credentials, or VCs, are issued by the respective trust anchors and held in the wallets of the liquidity provider, as well as those of traders, to authorize the use of funds held in respective digital asset wallets. In contrast against DeFi protocols in crypto space where users are anonymous, VCs are required for any user to transact against the institutional-grade DeFi protocol to reinforce KYC and AML processes. Using tokenized assets, authorized liquidity providers can deposit assets into the pool, based on the live price feed and the pool price. Authorized traders can key in the intended trade and get indicative pricing from the automated market maker. If the price is acceptable and within the market price threshold validation, the trader can proceed to enter trades against the pool. Atomic trading and settlement of tokenized assets enables greater efficiencies and transparency, as well as lower settlement risk. As one of the first of its kind to be developed on public blockchain, we continue to explore DeFi for traditional financial markets. In collaboration with regulators and industry ecosystem partners, and expand the possibilities the digital asset ecosystem can deliver to the world.
Additionally, another industry report points to the example of JP Morgan leveraging tokenization to offer digital asset solutions to clients. These are good things. It doesn't matter if they're competition or not. They're at the forefront because they're helping prove out use cases. The pie is plenty big.
Ripple cannot be a successful blockchain company if there aren't other successful blockchain companies, just like Google can't be a successful internet company if there aren't other successful internet companies. And it's one of the reasons why some of the tribalism in the space bothers me and frustrates me so much, is because we literally cannot succeed without each other. It's not possible. A standard can't have one adoptee. The value is that everybody can find what they want in this. If it's going to be this democratization and ownership, that's going to mean that everybody who wants to go there is going to be able to find what they want, and that's going to mean that you're going to have to enable some people to do things that you wish they didn't do, and that kind of letting go is going to be challenging to see. There's going to be some social change,
Right, and I'm assuming that's why blockchain is such an important technology when it comes to all of this. Because it allows for transparency, collaboration, other benefits.
Okay, so what JP Morgan does, it's not competition in that way. There's plenty to go around. The fact that they're capable of being at the forefront, and Ripple is too, that's good for both. So, there's this like evil empire thing, and I get that with things that are done with commodities market and stuff, but you have to like take pieces of what they're doing. And Jamie Dimon's telling his shareholders, what is he saying? Look out for DeFi on private and public blockchains. That's what he told his shareholders in 2022. He's not lying to his shareholders. Whatever they say publicly, that's you don't listen to. Well, you watch what they do, and this is what they're doing, leveraging tokenization, and what they say to their shareholders. With industry giants like these exploring the potential of DeFi, we expect an increasing number of similar pilots in the coming years, led by governments, financial institutions, and enterprises. As much as the BIS and the IMF probably hate this, and they probably do, it's going to keep continuing. And this jumped a little faster than I expected to. It's significant.
One of the things you said in the very beginning was for customers that don't exist yet, right? Mm-hmm. Solving problems for customers that don't exist yet and problems we don't even know about yet. Are there any that are top of mind for you that you could enlighten us on?
I think the future world where people have a sort of a wallet that's a sort of universal store of value. So that could mean tokenized stocks, that could mean cryptocurrencies, that could mean fiat assets, that could mean digital rights to things that they've purchased. It could mean NFTs for collectibles, games. This idea that you have a person who, when they get paid, let's say you get paid every 2 weeks, you get paid, and that money comes in, and you can have whatever you want to have happen to that money. And when you go to the grocery store and you get that bill and you go to pay the bill, that money, that payment can come out of your portfolio of things that you hold however you want. And you could be a millionaire, or you could be, someone in a third world country whose net worth is less than the cost of this microphone. And you would have access to that same set of tools. Obviously, you'd be using them on a different scale, but you would have the same set of options. You like holding gold? When you get paid, you could have tokenized gold. And when you go to pay You know, at the grocery store, you're using tokenized gold that's being sold. And it's just everything in one place. And that means like when you gift money to other people, when you pass away, your heirs don't have to go looking for your assets spread all over the place. You have just so much more control and can make financial decisions on that sort of more controlled basis. And I think I'll also go back to the very, very first vision that was associated with Ripple. It actually goes back to Ryan Fugger in 2004, believe it or not. And he had this vision of individuals who, if you need money, you might, you know, if you're not very well banked, you might get a payday loan or something terrible, or leave money on a credit card, because borrowing money from people is extremely inconvenient. Like, you have to ask somebody if you can borrow money from them, and they have to say yes or no. And if they say no, it's awkward. If they say yes, you have to remember to pay them back. And what if you pay them back and they forget that you paid them back, or they have to ask you to pay? Like, all of those things can be automated and made painless.
AMM solution is going to be deployed. You know, we're going to see more enterprise DeFi applications, but we need you guys to build the future. We need you to tell us what you need. We need you to build things. Everybody always asks me to look at my crystal ball. We're going to have NFTs. We're going to have the AMM. We're going to have hooks. It's going to get faster. Can't tell you anything else. We need you. Thank you. So great to be here.